Hey, Mark.
Hey everybody, how are you?
Good. Welcome to the
Good,
party.
man. How
Thank
are
you very
you?
much. Yeah, I'm not sure why this one is different than the one. Okay, it says I cannot start the screen share while the other
Don't worry.
participant is shared. Okay,
Yeah.
yeah.
Now you can. Now you
Oh,
can.
okay. Yeah, it's funny. Sometimes when I logged in last week, it was a little bit different than this, but that's okay.
Well, that was
Yeah,
so
it's because
special.
we had added you in advance to that webinar as a co-host with
yes.
speakers.
Okay, Mark. So, good to talk to you within a 1 week time span. Last week during the summit, you were pretty constructive the market, and then we got a pullback from the 61.8 retracement in S&Ps. Is this the beginning of correcting the bounce or the correction, or is it going to be pretty shallow in here? What are you thinking?
I think it will be pretty shallow, but I don't think we've obviously started yet. I mean, we've seen some evidence of breadth deterioration and momentum pulling back a little bit in the last couple of weeks, but we really have not seen hardly any real deterioration in technology. And so that tech is really the key linchpin to this whole market. And right now, tech is still, holding up amazingly well. So when you look at screens like on Bloomberg, when you look at how technology acts on an equal weighted basis versus the S&P, this goes back over the last couple of years, back on the left-hand part of the screen. This is 2018 when we sold off pretty sharply.
Okay, I'm seeing a spider chart right now, Mark.
Oh,
From TradingView.
Oh, okay. Let's see.
So you have the TradingView SPY up daily.
Can you see that now? Is that a different chart for you? Let's see.
No, you probably have to stop sharing and then show the next one. And maybe it's on a different screen.
Yeah, that's strange. I'm starting to use some new softwares outside of Bloomberg, and so the screen sharing, for some reason, we can just stick with this. That's fine.
Okay.
So bottom line is that I do view the that markets likely are going to start a correction next week. There's a big Bradley date coming up actually as of the 9th, and I think that'll affect markets starting on the 11th next week. And so, but I'm not certain that we have to necessarily revisit lows. I think that technology for now has been the strongest of any. You see the NASDAQ closing in on the highs from April already, whereas S&P has been far weaker. And so S&P, barely able to, even get up to levels that were, we've seen quite a few reversals in the last couple of days. So,
yeah,
that's
I was thinking maybe, it was a big level, say the 264, 260 was a fib level that it got through. I was thinking they had a chance to trade back down into that level before making another attempt to the upside.
My thinking is the highs from late March, and so that's right near 2634 in futures.
Yeah,
I mean, that's really
right.
the high of really the first move up off of these lows. So that's going to be really, really important. And so I'm actually eyeing markets likely either today or tomorrow. We probably are going to fail similar to what we did the last couple of days, and then pull back to really test the lows from earlier this week. And so when we get under 2771, that's the real key. So for those that are inclined to stay invested, anything under that, you're going to start to see a real weakness. A lot of the momentum indicators like MACD have now crossed a negative just on this churning. Technology is the only sector right now that's higher for the week, whereas, you look at financials and transportation, they've really started to see some real meaningful evidence of breaking down lately. So,
yeah, Mark, I saw a chart by Tavi Costa on Twitter where he's showing that growth compared to value is back at all-time highs.
Yeah.
Which is, kind of an interesting take if you pay attention to 20% unemployment, that growth is being favored again. It's almost like what got us to the party before the decline is also what took us back on this reflex move.
Yeah, well, you have to consider that really it's been, energy and financials make up a significant amount of this value trade. And so when financials start to turn down, and that's just really, it's damaging for value. And technology, of course, and discretionary have been largely growth themes. And so as the markets rallied, since the latter part of 16, growth has been dominant and just really is not, participated. So
I think this is the first time you came with a look at an emerging market in a long time. You like Mexico, huh?
So a lot of these have started to shape up a little bit. I think it's going to really take a decline in the U.S. dollar to see some real strength. Yeah. These have really lagged, and so I'm just watching these. Many of them had tried to break out a couple weeks ago and have consolidated, but they are more interesting to me really over the next few weeks on any sort of pullback. For me, it's
I've
just
been watching the peso. And it looks like the peso has one more low in it, the way we have it paired to the U.S. dollar max. And it looked like it could make one more high, which would be one more low in the peso. But it looks like a topping pattern to me in the peso. So could it also be about oil, Mark, and oil having bottomed? Mexico?
My thinking is that crude oil is also entering a time when it's going to start to be a little bit more negative. And so, we've had a decent bounce in crude, but we're actually getting close to a level where it should encounter a lot of resistance in the next week. And so, I'm looking at selling into crude on this little bounce. Okay. I think we're not going to get much up past, front month futures up in the high 20s as the level really to consider selling into this, and that the latter part of the month is going to be far more difficult. So
maybe a pullback towards 20 is something that I'm eyeballing once this rally terminates. Or are you looking for new lows in crude, like negative 85?
Lows, I mean, it depends on what you're looking at, but it's not really in front month futures, I think, but it's something where those anomalies make it difficult to you have to really make sure you're all looking at the same thing. I think that crude in general, we're going to see a pretty substantial period of weakness just because demand has dropped off so materially, and so supply cuts haven't really nearly kept up with what the demand drop off is. And we see the eco data today, coming in at 3.1 million new claims. I mean, it's just incredible the amount of economic deterioration we've seen, and I still think that's largely understated. I think that in the months to come, that's going to be far more damaging. That doesn't mean stocks can't rally through that. And one of my key points that I made last week was that sentiment remains very skittish from a retail standpoint, based on things like just economic uncertainty, earnings. You're seeing guide downs all around, and there's just no virus. There's no vaccine for the virus. So it just makes it very, very difficult to think that there's a lot of confidence for people to rely on. So we're in this window where stocks have rallied throughout all this, and people are scratching their heads as to why Apple's making new highs every day. But that's going to be a key piece of the puzzle when you look at.
So the economy and the market could diverge for quite some time. I mean, isn't that how it was once we came? Once we came out of the hole.
It's always proper to look at the market based on cycles and sentiment, and not based on the economy as to why it moves. But here's Apple. I mean, the stock has been a pillar of strength in the last month. So it's been tough. So those that are expecting a correction, and I do count myself in that camp coming into next week, you're going to need to see stocks like Apple really start to roll over. It's just going to be very difficult to make a case, given the percentage that Apple represents in many of these ETFs and indices, with it continuing to show very good strength.
Yeah, Microsoft. I don't think Microsoft has made a new high yet, has it?
So the stocks that represent the top 20% of the S&P, I mean, you look at how they've acted of late, and they've all shown very good signs of strength. So, Microsoft's doing very well. Apple's doing great. Google, Alphabet, also showing very good uptrends of late. Look at Netflix, which has become now the new infrastructure name. I mean, that's showing an amazing amount of strength. And so you go on many different time frames, and the stock just looks very, very good. So instead of going out, we're all sitting at home watching Netflix, and the stock has one of the better longer term patterns out there. Many of them.
The miners have been shining.
Yeah.
Continuation, or do we need to digest some of these gains?
I did a thing yesterday on CNBC on the miners, and I was asked, and I still think the cycle for gold should still be to the upside. I still think it's very difficult to say gold's going to fall. So when you look at things like GDX, I mean, you're really just getting above peaks that have been in place since 2016 on this little surge. I mean, granted, they have been very volatile, but in general, we've recouped a lot of this, damage. And the longer term chart back to 2011 is still very constructive on this. So, yes, with regards to gold, I think you do need to make a little bit of progress to see. You're an
Elliottician, Mark. Is the daily gold chart in a wave 4 triangle compressing right now, moving sideways, which would imply one more move to the upside that would be terminal. Do you see it that way? Take a look at your gold daily.
So
you still have the peso chart up there.
Yeah, let me see if I can change it. I'm going to have an easier time navigating on Bloomberg. Let me see. I'm going to try to. Can I stop share and then reshare?
That's it. Right. Yeah.
So
select Bloomberg this time. There you go. Okay. So you see the last few weeks action there?
Yeah, no, certainly. So that's something where, I don't disagree that the move up from March is right now in a little consolidation. It really would only take a move up above 1714 and really spot gold to really turn this back higher. And so when you look at it on, different time frames,
looks like just consolidation before another pop. So
yeah, you certainly can't be all that bearish on gold here, and so the monthly chart. I mean, that's still very, very strong. I don't see any evidence of any real weakness. You look at the last few months, and we've barely closed negative. We finished high, so I am expecting this to get resolved by a move to the upside. I do recommend GDX. I'm long GDX and Nugget. I think they'll be fine. So, but yeah, it's going to obviously take a move above this consolidation. I did have concerns about the level of participation of things like silver. I think it largely has still been a gold trade, and silver has.
Yeah, it has been.
The positioning seems to be very still strong with regards to for gold. So here's this chart I was trying to show before on technology, only that tech. This is equal weighted tech versus the S&P, and that we saw some brief deterioration in 2018, but really, coming out of this, tech has really survived this entire little downturn we saw in stocks amazingly well. This is equal weighted tech versus the market. So I would think that once tech starts to roll over, and there's no saying it has to, but it's at 25% of the market.
So when the strength rolls over, the weakness gets weaker.
But here's XLF. I mean, the financials are in really tough shape, and this is with yields having bounced of late. And of course, the auctions, you see a massive amount of treasury supply, and that's been important. But things like, KBE, KRE, those are down to very, very important levels. And the pattern, I would argue, is still very overlapping and choppy in a lot of these, which means that these probably can go to new lows, when you look at the banks. So, I don't necessarily love this sector. I think that
banks and oil's still the negative sector of the market.
Yeah, I mean, I've been long a couple of crude plays, and so we're up to levels now where we're arguably breaking this little minor downtrend, but we're into a level of pretty massive overall resistance, I would think, with crude over the next few days, where I'm not expecting that really 30 is taken out. I'm thinking this is actually a time to consider fading for a pullback to the, potentially the teens in the months ahead. So I'd look at, the energy sector has not really kept up also lately with what has happened with crude in recent days. Even you've seen some, that's not a real constructive move thus far. So, we'll wait and see.
Yeah. How about last week? And not much has happened. Still neutral on the dollar here, Mark.
Yeah, it hasn't really shown much evidence of really, making a move one way or the other. It's still, for me, you saw maybe a day of trying to break down, but this pattern is still intact. You'd still be inclined to just really trade the ranges here.
Okay.
So next couple of days, you can see things still continue up, I think, and then you'll probably be repelled again. If you break this little 1 month range, then I'd have some greater, conviction.
Okay.
So the moving rates, we'll see when this starts to change. But it was really the move in January breaking down that coincided with, equities following suit when we started to break down, and so.
Right. Yeah. So maybe I'm wrong, and there's another pullback in yields. It's sure trying, but today doesn't look so good. Okay, so Mark, you want to show your site, and unless there was anything else you wanted to cover?
Yeah, I'm just, I talked a lot last week, and a lot of those themes remain in place. I'm really, I think the next week we're going to start to see some evidence of markets finally obeying gravity, and the technology probably starts to stall out finally after this little run. I think that financials are going to be a big part of that, and start to, we could see a little bit of a sell-off in financials under it, and that'll be a big deal. And so,
okay. All right. So some type of Bradley date next week. And
for those that aren't familiar with the Bradley, I mean, we've got quite a. This is the chart for this year, which shows a pretty big turn on May 9th, and then the middle part of August. And so the longer term Bradleys were pretty amazing at signaling a long-term turn in 2000, right near the peak, and also in 2018 for those that are familiar with the long-term Bradley and how to see it. So this is, something that I've showed people. I do give it some importance, and I think that it's something that really needs to be respected when you come into these turn dates. That can be key. So
look for a day when the market's up and semis are lagging. How about that?
Yeah, semis have been important. So let's see if we can. Let's pull up my website real quick and show people that, and on that note. So Newton Advisor, I've been running technical analysis for institutions and individuals over the last few years, and you can get a trial. Just simply fill out the form above. But I put out work 2 to 3 times a day, a video. I'm doing a webinar today at 1 o'clock for those that are interested, and I really try to concentrate on sector rotation and proprietary long and short ideas. I started to do some work with StockTwits and created my own room there, so I put out work there as well. But it's really something where I've really left it open towards anybody that wants analysis. I'm certainly happy to accompany you, whether it be an institution, an RA, wealth manager, brokers, or individuals. So.
Okay, well, thank you so much, Mark. I tell you what, people aren't going to go wrong following you. So follow Mark Newton.
Thank you very much, Dale. Yeah, it's a pleasure joining you as always, and have a great next couple months. I'll look forward to joining you. Maybe we'll see some more volatility in the next few weeks. There'll be a lot to talk about, but right now it's just been all technology, and we'll see if that changes.
Okay, buddy. Stay healthy.
Take care,
you
Dale.
and your family. Okay, buddy.
Yeah, stay happy and healthy. Bye-bye.
All right, everyone, that's Mark Newton. You can follow Mark on Twitter at MarkNewtonCMT, and that's going to be a wrap for us, everyone. See people going into the chat room, members chat right now. All you have to do is join, and don't just count your pips, count your blessings. You're welcome, DJ, Sinatra, Brock. We'll see everyone for NFP tomorrow. So see everyone tomorrow. You're welcome, Tom, Scott. See everyone later on. Adios.